Good morning, traders. Welcome one, welcome all to the Bookmap channel.
Good morning, traders. Welcome.
Is there an echo in here?
Welcome all.
My name is Charles. I run a YouTube channel called Piratetraders. We're a community of traders who trade the ES, the NQ, and we look at the market through what's called a two-way auction process. So that's what I'm going to talk about here this morning. How the ES and the NQ moved through that two-way auction process to give us some kind of clue as to how to trade it intraday. Okay. So last week we talked about, earlier on in the week, the market was pegged around the 4,400 level. My guess as to that was that the options market earlier on in the week, back up in here, the options market put on a lot of hedges. A lot of puts were bought, and so the market was pinned, waiting for Friday's options expiry to come along and, unpin the market. Well, somebody asked me, they said, what happens if just so many people go long or short? Can they break that pin? Is it possible to get away from the market being stuck at a certain level? And the answer is yes. It turns out war in the Middle East is all it takes to finally break out of that pin. So Thursday and Friday, we started to make a move lower. That was very bearish. Okay. Then we had Friday's trade, which then brought in the end of all those options. So we are now in what Jam Croissant would call the window of weakness for the options market, which basically just means there's a whole lot less stuff baked in, right? There's a lot less hedges. There's a lot less market makers hedging against options that they've sold and so on and so forth. So there's just less leverage and there's less like bracketing bots in the market to kind of keep it in one place. So the long and short of it, folks, the market's free. It's free. It's free as a bird. It can go anywhere it wants. It can do anything it wants. We can get a massive move. So for that reason, I don't assume today is just going to be a slow, grindy, sideways day. I do assume the market is either going to continue the excess to the downside. This will just be the beginning of the momentum. Or we'll turn around and try to backfill some of the weakness that we left behind on the move down yesterday. So likely today, the market is either heading up for the weak references at 42.70 and then to backfill the base of the single prints around 42.87. And we would monitor for continuation higher from there. Or they are likely heading back down to the overnight low at 42, we'll call it 42.15, and potentially monitoring for continuation lower from there, right? If they get down to that overnight low and they get new selling, man, they could really take the market much lower. So I do believe we're going to get some kind of momentum today, but I don't think we know what that momentum is yet. I think the fact that everyone on Twitter is convinced that the market is going to drop, 100 points today is exactly the reason why it won't. So I will be looking at this morning the same way I look at any other gap down. I will be asking myself the question, what happens at the market open? The first order of business for the market is going to be to try to get back up to yesterday's low at 42.47. Okay? So that attempt to fill the gap is the first thing that I'm watching for. If the market cannot fill the gap, if it doesn't even try, if it just immediately starts going lower, or if it tries to fill the gap but it can't, it gets smacked back down lower, either of those scenarios would be the most bearish to me. Also, if the market was able to fill the gap, but then it was not able to spend very much time inside of yesterday's range. So, for example, it moves up to 42.48, pokes into yesterday's range, spends just a few minutes in here, and then it dips back below again. That would also be a gap and go to me, which would be bearish for further downside continuation. Okay? Only if the market pulled back up inside yesterday's range, so they filled the gap, they got back up into yesterday's range, and they spent time and they brought in volume. If they were able to do that, I would look for the market to head up and test the overnight high. So spending time, bringing in volume inside of yesterday's range increases the odds of a test of the overnight high. If they get to the overnight high, we look for support there for continuation higher, or a look above and fail to come right back down. So the market could make a big move today. And if that move is going to be to the upside, it will be very easy to see, because first they'll fill the gap, then they'll spend time inside yesterday's range, then they'll push above the overnight high, and they'll spend time above the overnight high. That is signal after signal after signal after signal telling you the market is not going to continue going lower. It's going to turn around and start backfilling some of the weakness we left behind, right? Lots and lots of chances for the market to tell you, hey, we're not as bearish as we look. So pay attention to those signals, right? If the market gets above that overnight high and it finds support, it is looking to head back up and start backfilling the weakness. Okay. Now, let's say instead the market opens and it immediately starts to trade lower. Let's say we straight up get a gap and go. The market opens, it pushes down. To me, this wouldn't be something I'd want to trade. Generally speaking, a gap and go would instantly get me bearish for continuation lower. So if I saw the market open and it couldn't get back up there and fill that gap, I'd almost always be short to test that overnight low, looking to take profits down there. Today, I will not be, just to be cautious. Okay. So for me to truly be bearish that the market is going to head lower today, I'm going to need to see new selling at that overnight low. Otherwise, what I am more afraid of is the highest probability, the most likely thing to happen is gap and chop, which means we'll basically probably spend the first few hours today just grinding around inside this range, below yesterday's low, but above the overnight low. And that gap and chop scenario to me is the most likely of all. So I'm not going to get super bearish right away if we don't fill the gap, because we may just need to chop for a while before we do. But if we fill the gap, then there's instantly something to do. Can we stay in yesterday's range or do we fail? Okay. Good morning to Ebb and Flow. Welcome. Top Gun is here. The Bookmap says good morning, Charles and Pirates. Good morning, Bookmap. Madge, good morning to you. Trading for a Living is here. Good to see you. David G in the house. Jay is here. He says, thank God it's Monday and the casino's open. I agree. Alios, good morning to you. Welcome. Gino and Jack, good to see you. All right, so let's take a moment right now and we will zoom out and we will do our top-down, Jim Dalton's top-down approach to give us some perspective on the market. We're going to start looking at the monthly charts and see if this recent change in market behavior has brought in any clear changes on the monthly chart. Okay, so what are we seeing on the monthly chart? Well, first things first, we have momentum down on the monthly chart. Okay, we have 3 candlesticks in a row that have lower highs and lower lows. We also are building a bit of a channel in terms of the shape of the move. So that is bearish to see. That is a sign of momentum down. But we are also pushing in, as we have been, pushing into previous support. So we could get a bounce here. So on the monthly, I'm paying attention to a channel low. Probably somewhere around 4,200 for a bounce on the monthly. All right, let's go to the weekly. So on the weekly, what stands out to me is that same as with the monthly, we have momentum clearly to the downside. Okay. Last couple weeks have been balancing. We have now broken out of that balance to the downside. So that tells me if we do get a gap and go this morning, if the market opens, it stays below yesterday's low and it continues lower from there, that is extremely bearish to see, as balance often leads to excess. So if we are breaking out of balance on the weekly time frame, that could lead to excess on the weekly time frame to the downside. That would be bearish to see. In the same way, though, that same thing must be thought about if we don't. So if the market pulls back up into Friday's range and it starts to spend time and it starts to bring in volume there, it's exactly the opposite signal. It's very bullish that the market is going to head back up towards that opposite end of balance once again. So on the weekly time frame, the gap this morning is very important. Do we get a gap and go, continuation lower, or do we pull back up into yesterday's range and then head up and start to retrace the excess to the downside? The weakness that needs to be backfilled. And then let's zoom in and take a look at the daily. The daily to me is telling me the story that we have re-entered this previous balance area that we literally spent like 2 freaking months in. You guys will recall April and May of last year. That was quite a vicious balance area. And so that increases the odds that the market is heading down to test the lows from that balance area. Down at around 4,200 as well. So looking at the monthly, the weekly, and the daily, all of them are telling me the market has momentum down and that before it's ready to reverse, it likely needs to test 4,200, with the exception of the weekly, which if we got back into yesterday's range, we could get bullish. Another thing that jumps out at me right away, looking at the daily chart right here, is that the market does not often have more than a few days of excess in any one direction. It often needs to balance off that excess sooner or later. So you might see a move here where you have like 2 days to the upside and then 4 or 5 days of balance before another 1, 2, 3, 4, 5 days to the upside, and then 6 days of balance, balancing that off with price. Okay, then another 4 days, 5 days to the upside, another 4 days of a pullback. This was a good long push, quite a push, which lasted 1, 2, 3, 4, 5, 6, 7, 8, 9 days, and then led to 2, 4, 6, 8, 9, 10 days of balance to the side, and so on and so forth. You can see the way that this works. When you have a big move of excess on the day time frame, where the market is moving very, very hard in one direction, afterward you get balance. You get some kind of balance. And there's 2 ways to balance off price. One is to pull back with price, repairing the weakness. The other is just to go sideways at lower prices. Okay? So while we have, 5 days of momentum down last week, we know that momentum is likely coming to an end soon. They will likely need to balance that off. Because we're inside of a previous balance area, that increases the odds they will do so using time, not price. So all of the things that I just described in combination make me feel neutral to bearish today. The only thing that changes my mind intraday is support inside yesterday's range and then support above the overnight high. Otherwise, I remain neutral to bearish, assuming the market just wants to get smacked down and continue down to 4,200. Let's jump over and take a look at the NQ. So it's pretty much the same read on the NQ, but for slightly different reasons. For one thing, the NQ had already entered that previous balance last week, and they worked their way to that balance area low on Friday. They then spent a lot of time and brought in a lot of volume during the overnight over the weekend inside that previous balance area. So it's the same exact thing for the ES and the NQ. If the NQ fills its gap, gets up to Friday's low around 14,650, okay? If it gets up to Friday's low and it gets rejected, it's a gap and go. And that is bearish to see, and we look to test the overnight low at 14,530, call it 30, 14,530, okay? But if we push up into yesterday's range and we stay inside yesterday's range, then I would look to test that overnight high. If you can stay above that overnight high, well, then guess what just happened? A look below and fail of a previous balance area low, increasing the odds you're heading to the previous balance area high. Okay? And you got tons of weakness that needs repair. You got a weak high, you got single prints. So both markets basically have a potential to make a big move today. Either a continuation lower or a pull back up to backfill some of the weakness left behind. And both markets, the gap will tell the tale. Whether we fill the gap and then what happens when we do. Actually, a pretty simple morning for a day trader. Although I suspect it will be an emotional one. Any questions from the chat? We got 10 whole minutes till the market opens. Let me know if you have any questions. Good morning to Rui, Pass 2910, and Bust a Move. Welcome. Bronther says, what are those 19K and 2K indicating at the bottom of Bookmap? It's a great question. I assume you're talking about these numbers down here at the bottom of the screen. So basically, what that is showing us is the liquidity that is above and below price. So over here, the column on the right, that's the current order book right there. And so the 17,000 that you see up here, that is the number of short contracts that are above price that are waiting to get filled. And 1,300 is the number of long contracts below price waiting to get filled. And this is the divergence between the two. So the fact that it's red just tells us that there's 4,000 more contracts to go short than go long in the current order book. And then over here, it's the same thing, only it's whatever section of the chart you have filled in here. So watch, I'll just zoom in a little bit. And you'll see those numbers start to change because less and less contracts traded right here as traded in, that whole space. So it's just showing you whatever's currently visible. Good morning, Percy. Cortman in the house. Cortman says, what's the impact of the 10-year yields? Well, that's just not my forte. Whatever is going to happen based on the 10-year yields, I'll see it in the S&P 500. So here's my question. Does the market fill the gap? If the market fills the gap, does it stay inside yesterday's range or does it bounce off? If it stays inside yesterday's range, can it test the overnight high? If it tests the overnight high, can it find new buyers? The reason why won't matter to me. It's just, is it a gap and go or is it a gap fill and what comes next? And that's not me saying that there isn't wisdom to be found in studying the 10-year. The point is just it's not something I personally look at. Pass says, low of the day was taken in European session, so is not strong. Do you mean the low from Friday or do you mean the overnight low was made in the European session? I would agree with you that the overnight low is not strong. If we head down there, we're likely going much, much further. We have a lot of momentum. Like I said, I don't think we're going to go straight down. I don't think we're going to open and immediately go to the overnight low and immediately sell lower. I suspect we're going to get some gap and chop here first. But yeah, I would consider there to be a lot of momentum to the downside. And what does that mean when I say that? Well, the buyers down here, they're not strong hands. If the market starts coming down for it, they will all get squeezed. Brave as they may be, brave as they may be. Monta says, can you see what is prep buying and what is spot buying on the same screen? Yes. So the liquidity that you see in the order book, okay? So that's, again, this column over here on the left, okay? This liquidity that you see, those are the orders that are waiting to fill. Okay, so you can see, I mean, if you want to, I don't have it set up to show, but you can see the exact number of contracts that are there. I don't care. I just go by size. That's the only thing that matters to me. The dark, how dark the color is, I'm purely visual, but you could look at the exact number that's there. Anyway, the point is you've got a certain number of contracts that are above and below price. Those are in the order book right now waiting to fill. What Bookmap lets you do is Bookmap lets you see how the market interacts with those orders when it gets there, right? So let's say the market pushes back up. We know we've got an iceberg waiting at 42.3750. So what happens with that iceberg? Does it fill or does it just disappear? Does it fill a lot of contracts? Does this person get short hundreds of contracts or do they just get short 25, right? There's information in that. So let's say it keeps going and it heads up to this node around 42.40. Okay, well, then we can ask the same question. There's a lot of contracts to go short up here. What happens when price gets there? Do they fill? Do those people actually get short? Or do they spoof? Do they instantly disappear? So being able to see what's in the current order book and then compare it to what happens when price interacts with it is very important information. So here's an example just looking at this morning, where you had tons of liquidity sitting here at 42.36, okay? Tons of liquidity. Price comes up to it. What happens? It disappears. We can zoom right in so you can see. Do you see that? It's sitting there. They're trying to get to it, trying to get to it. They lower it down, trying to get to it, trying to get to it, trying to get to it. Boom, finally they get to it right there. And what happens to all that liquidity? Whoosh, it just disappears, right? So that tells us that these weren't real sellers waiting to go short right here. They were just trying to pull the price up. They just wanted to get it up to here first. They weren't looking to get short there. So if I was feeling bearish, if I was watching the market in here and I'm feeling bearish and I'm thinking we're going much lower and I'm looking for resistance to sell, I'm watching that node. And when that node fills, I'm like, oh, fuck, I got to sell. Here we go. But when it spoofs, I go, okay, they're not trying to push the market lower. The market's going nowhere. This was just a magnet to pull the price back up. And then they disappeared it. It was fake. So that's basically what I do with Bookmap all day, every day, is just compare the liquidity in the order book to what actually trades when the market gets there. One minute to market open. Never mind. 1 second to market open. All right. So we have a gap down. That is bearish to see. The first order of business for the market is to try to fill the gap, to try to get back up to 42.47. If they are not able to, the first thing we assume is that they're going to just go sideways for a while down here in the lower end of the overnight range. And that would be bearish for the market to break lower later in the day as a gap and go. If they get to yesterday's low, we see what happens next. Do they reject off of there or do they stay inside yesterday's range? Both markets. It's a gap, baby. Okay, so as of now, we tried to fill the gap and pass back through the opening price. So this is technically a gap and go. But as I clarified, I don't suspect we're going to get a big, huge move first thing in the morning. I suspect we're going to chop inside a range here for a bit first. So that gap and go first thing is bearish to see. It does make me feel more bearish, like the probability that the market will go lower today is higher than the probability that it will go up. But I do think we got to go sideways for a while first. So I'm looking for support between 42.26 and 42.22 to pass right back through that opening price again and then try to fill the gap. So another way to explain that is on a shorter term time frame, I think we're going to find support and push back up. But on a longer time frame, I think we're going to get smacked right back through once we get resistance at the gap fill. Got one of those funky icebergs. We hate these. It's like a glitch in the matrix. It just follows price. It just hovers above it. All right, no support at 26. I'm now looking for support at 22 for a bounce to head back up through that opening price. If not, then it's bearish to head down and test the overnight low. All right, no bounce at 22. So that tells us we are likely heading down to 42.15 to test that overnight low and look for new sellers there. So that will be a look below type of level where once the market pushes down there, there's going to be stops for people that are going long right now. The stops are going to be down there, so you'll get a little pop, a little bit of a liquidation. And then what happens afterward gives you a signal of what comes next. So do we just look below that overnight low and then fail and pull right back up? Or do we look below and get new selling down there? New selling down there, bearish for continuation lower. A look below and fail is still bearish as long as it's below the opening price. At this point, as long as we're below the opening price, this is a gap and go, which is bearish. Only if we can pass back through the opening price at 42.32, only if we get back through there can we go back to a gap fill. So until then, the bears are in charge. and we're just trying to see how far they can push it. First stop, overnight low. Okay, so here's the test of the overnight low. So once again, the question now becomes, does the market get new selling down here, or do we just pull right back up into that overnight range? New selling is bearish for continuation lower, pulling back up in for chop sideways. Wow, both markets completely in sync with each other, and Q testing the overnight low at the same time. So both markets did a look below and fail of the overnight low, meaning they didn't immediately bring in new sellers. They pulled back up into that overnight range. So that tells us we likely need to go sideways a little bit here to bring in more sellers, but the momentum is clearly to the downside. So both markets, as long as they are below the opening price, they are bearish and just looking for new sellers to come smack the market down. May have to go sideways a bit first, though. Ruiz says, how do you use iceberg and stop loss indicators on Bookmap? Do you use them to enter or exit positions? Do you look for both indicators? So I don't have any parameters that I use for entering and exiting positions in an exact way. It's just not how I approach markets. It's not that I think there's anything wrong with that. It's just not how I do it. So for example, I would never say, if there's an iceberg above price, I always go long to head up and fill that iceberg or something like that. Like I never ever do anything like that. Every single signal that I get from the market, which is basically all the indicators that I look at, right? Those are signals from the market. They all just give me an understanding of what the market is doing, right? They tell me, do I know what's going on right now or not? Right? How good of an understanding do I have? When I feel I have a good understanding, the only thing I need to buy or sell the market is support or resistance. So if I am bearish and I think the market is going to go lower, all I need to see is resistance to get short. That's it. Like if I think the market's going down, I don't need anything special to convince me to get short. I just get short. Where the skill of trading is for me, for my style, is in not participating when I don't know. It's in only ever taking trades when I'm absolutely certain. And it turns out I don't need exact parameters if that's the criteria. Okay, so they just deleted that bot, that stupid bracketing bot that was stuck above price. So whatever that was is gone. We are now testing the opening price. So if they're able to pass back through and there they go, then they're heading back up for a gap fill. Man, going to be one of those mornings. Okay, so this means it's still bearish, but it does mean the market is likely to try to fill the gap once again up to 42.47, and we're going to get some gap and chop. So again, on a daily time frame, I am still bearish. The momentum is still to the downside, but intraday, we need to pull back and try to fill the gap and look for sellers. So then the question was, how do I use icebergs? How do I use stops and icebergs, the indicator? Okay. Well, basically, when I see an iceberg, it tells me two things, right? It tells me, first off, the market is likely to visit that level again. And it tells me who are the participants at that level. So if it's a random level, I'm going to assume those participants are bigger traders who are looking to accumulate a position, and they're getting in using the iceberg to slowly accumulate that size. But if I see that iceberg at an exact level, so for example, the iceberg that's circled right here, that's exactly at our high today, right? So we have a low volume high, and the iceberg is what smacked it down. So that significantly increases the odds that we'll want to test it. But it isn't bullish, right? Because likely as soon as they get up there, this will fill and push the market right back down. I can also use icebergs to recognize like bigger picture. Who are the participants doing business today? If there's tons of icebergs everywhere, both sides of the market, well, I know it's just bots playing games, fucking with the market. But if not, if you just see one kind of random iceberg here and there, like we are this morning, that's real business. That's real sellers doing real business. So these all just give you a clue. Got some bot shenanigans here. So these bots obviously grinding right here, trying to fool a lot of people. Get some liquidity above price, take it out. Get some liquidity below price, take it out. Increasing the odds of more chop, in my opinion. Chopping broccoli. There we go. Deborah says, how do you identify bot shenanigans? Rewind about 5 minutes and you can see it. So the market made its move up to here fairly clean. You know what I mean? Look below and fail of the overnight low. Market sort of just drifted its way up. And then out of nowhere, that bot disappeared that had an iceberg above price the whole time. And as soon as it did, they caused this big stop run right here. That green dot is sellers getting squeezed. Okay, more sellers got squeezed. Boop, boop. We passed back through the opening price. From that moment till now, nothing but bot shenanigans. So just go back and replay it and watch what happens. Watch how many icebergs suddenly pop up on both sides. Iceberg long, iceberg short, iceberg long, iceberg short. And we know why they do that. They're grinding and grinding here to get you long, get you short, get you long, get you short. So they can come back for your stops. All right, we got some resistance here around 43. Looking for the market to pull back down to the opening price once again. But the shenanigans continue. Y says, I'm new. What is the software? Welcome, Y. Happy to have you. What is the software? The software on the left is called Window Trader. That is market profile software that allows you to look at the market's information in 3 dimensions. So whereas a candlestick just shows you price over time, the market profile chart shows you price and volume over time. So it gives you a 3-dimensional view of the market. And then the one over here on the right, that is the Bookmap. So that is what I use to see the liquidity in the market. That is the colors, the bars you see over here on the right. That's the liquidity that's in the current order book. And then over here on the left, that's what traded at that particular moment. Okay, so now as we get some resistance around 43, we're back to looking at the opening price around 32. If they can find support above there, they'll head back up to try to fill the gap once again. If they pass back through the opening price again, it is bearish as a gap and go once again. And we're heading for the overnight low. Oh, the tug of war in a gap and chop. Why this person shared the correct link. It's bookmap.com. Gino says, this is feeling like a bear trap. I agree. As I've said, on the day time frame, I remain bearish as long as we are below that that overnight high. So I do suspect that this move to the upside is just to bring in sellers for the next move to the downside. But that's the way it works. Sometimes the market has to rally before it can break. So as of now, as we're printing the B period here, we have created a poor high. So that increases the odds that the market will first push away from the poor high, heading down towards the opening price. But then wherever it finds support, it will come back and repair that high, passing back through. That increases the odds in my mind that we want to fill that gap today for sure, because the repair of the poor high would be back up in the gap fill. But I'm not bullish beyond that, not unless we spend time inside yesterday's range. The high is still poor. So I got to leave. I got to say goodbye. I got to say farewell. I don't want to, but I got to. My time has come. It's time to head on over to the private stream for the Brigade members. If you've been enjoying what you've been seeing thus far, you might consider joining the Brigade. It's $10 a month, and you get to hear me live stream for the first hour of trade every single day. As far as what I will leave you with here today, my predictions of what's to happen, what's to come. So first and foremost, on the day time frame. So throughout the rest of today, I believe the market will either go sideways or lower. Okay, I am bearish on the day today as a continuation of the momentum that we have had on the day time frame. I think we need to test the area around 4,200, looking for support in there. Once we get in there, I suspect we start going sideways on the day time frame for a while and just bounce around in a range down here. I believe that is a more likely outcome than pulling back up with price. Although both are possible, the balance with time seems more likely to me because we re-entered an old balance area from back in May. Okay, so the market makes this big move back down into balance. We're then asking ourselves, is it just going to rotate sideways inside the balance area, or does it need to pull back up with price? I'm saying I think the second scenario is more likely down here. Okay. However, I don't think the market is going to keep going straight down forever. I do think we need to balance off this excess. I think today will be the last day of excess, and we'll need to start going sideways or pulling back up soon. Okay? So as far as how I'm going to trade this morning, I will only be looking for short trades in between the gap fill, 42.47, and this node of resistance right here around 42.58. I will only be looking for shorts for continuation lower. If the market starts to spend a lot of time in here and starts to bring in a lot of volume inside yesterday's range, I will know I am wrong. I should no longer be bearish. At that point, I will assume that we will likely work our way through the resistance and test that overnight high. Okay? Now, again, right now at this moment, I don't think that's going to happen. I think that's the less likely scenario. But what will change, what new information will change that opinion is spending a lot of time and bringing in a lot of volume inside yesterday's range. That would change my mind. But as of now, I assume we're going to get rejection and head lower. Okay? But if we spend the time, I'll assume we're going to test the overnight high. If we get new buyers above the overnight high, well, then I'll know I'm wrong on the idea of continued momentum, and I'll assume we're heading higher from there. So I am neutral to bearish on the day and can only be convinced otherwise above the overnight high. With that, I will say goodbye. Wish you all the best of luck. Happy trading today. Happy trading this week. I hope you make lots of money. And if you don't join the brigade, if $10 is just too extreme a price to pay for insights every single day, well, then we'll see you here next Monday morning. Thank you very much. Have a great day, everyone. Bye-bye. Still got a poor high. Still got a gap that needs to be filled.